Let me ask you something. Where were you last night when Bitcoin dropped $2,000 in under an hour? Because if you were sleeping, or if you woke up and saw the number and immediately felt your stomach drop, I need you to stay with me right now, because what happened in the last 24 hours is not what the headlines are telling you it is. Here's the surface story. Bitcoin was holding above $70,000 all of Saturday. Steady, quiet. Then late Saturday evening, President Trump posted a message that sent shockwaves through every risk market on the planet. He gave Iran a 48-hour ultimatum: fully reopen the Strait of Hormuz, or the United States will, and I'm paraphrasing his own words here, hit and obliterate their power plants, starting with the biggest one first. Within 60 minutes of that post going live, over $240 million in leveraged crypto positions were liquidated. Bitcoin touched $68,241. The broader market shared hundreds of millions. By Sunday morning, roughly $299 million in liquidations had printed across crypto, with 85% of them hitting long positions. People who were betting on Bitcoin going up got completely wiped out. And now this morning, the fear and greed index sits at 10 out of 100. That's not just fear, that's extreme fear. The lowest reading the index has registered in months. And this is the part most people miss entirely, because most people look at that number and see danger. But there is a very different way to read a 10 on the fear and greed index, and the data sitting underneath this market right now tells a story that is completely different from the one being written in the panic. So let me show you what is actually happening underneath all the noise. First, let's understand what Trump's statement actually did to this market, because the mechanics matter. The Strait of Hormuz is one of the most strategically important waterways in the world. About 20% of global oil supply passes through it. When Trump threatened to escalate military action against Iran's energy infrastructure, two things happened simultaneously on Wall Street. Energy prices spiked on fears of supply disruption, and risk on assets, meaning assets where investors chase returns rather than safety, started bleeding immediately. Bitcoin fell squarely into that second category. Here's what's interesting about that. For years, Bitcoin's advocates have called it digital gold, a safe haven that rises when geopolitical uncertainty spikes. This weekend proved something more complicated. In short-term crisis moments driven by sudden geopolitical shock, Bitcoin does not behave like gold. It behaves like a risk asset, like tech stocks, like anything that gets sold when fear takes over fast. Gold didn't crash Saturday night. Bitcoin did. But and this is the critical distinction you need to hold on to, short-term price behavior during geopolitical shocks is not the same thing as structural market direction. And right now, the structural picture underneath this market is sending signals that the panic is completely drowning out. Let me walk you through what the data actually shows, because we have it right in front of us. Look at the liquidation heat map from CoinGlass on the Binance BTC perpetual chart. There is a dense cluster of yellow and green liquidity, meaning extremely high liquidation leverage, sitting just above the $71,000 zone. That liquidity hasn't been touched, it hasn't been swept, it's sitting there like a loaded spring. And every hour that Bitcoin consolidates without collapsing further, that overhead liquidity becomes more of a magnet than a ceiling. Now look at the smart money net open position on the lick terminal chart. As of right now, that reading is sitting at positive 1.31K. Smart money is net long, not marginally, positively, measurably, net long on Bitcoin right now, even as the retail crowd panics. And look at the other panel directly below it. Retail net open position sits at negative 396.9. Retail is net short. They are actively betting against Bitcoin at the very moment smart money is positioned to the upside. I want you to sit with that for a second, because this divergence is not random. This is the same pattern that has appeared at major Bitcoin turning points. Smart money positions against the crowd. The crowd, driven by fear and headlines, goes the wrong direction, and then the market moves in the direction that causes maximum pain to the maximum number of people. Now let's look at the bigger institutional picture, because this is where today's crash has to be understood in context. The Bitcoin ETF data from CoinMarketCap tells a very specific story. On March 20th, just 2 days ago, Bitcoin ETF net flow was negative $52 million. Last week, ETFs recorded $182.10 million in net inflows. But look at the 3-month figure, negative $158.30 million. That tells you there has been sustained institutional outflow over this period, not catastrophic collapse, but persistent pressure. And yet, despite that pressure, total Bitcoin ETF assets under management still sit at $104 billion. BTC ETF AUM as a percentage of total market cap sits at 6.90%. This is not a structure that is falling apart. It is a structure that is digesting a macro shock, rotating some risk off, and sitting on a mountain of capital that has not left the Bitcoin ecosystem permanently. The strongest ETF month on record was July 2025, with $6.18 billion in inflows. The weakest was November 2025, at negative $3.50 billion. We've seen outflow environments before. They ended. The question is never whether they end. The question is whether you understand what happens in the interval. Now here is the thing about Trump's Iran statement that most people in crypto are not discussing. He contradicted himself within the same news cycle. In the span of 36 hours, Trump said the U.S. does not want a ceasefire with Iran, then said the U.S. is considering winding down the war. Then Axios reported peace talks were being planned. Then came the obliterate the power plants posts. Within the same news cycle, both de-escalation and maximum escalation were floated publicly. Markets hate ambiguity more than they hate bad news. Clear bad news can be priced in. Contradictory signals from the most powerful person on earth create the worst possible environment, one where nobody knows whether to hedge for war or position for peace. And so everyone does a little of both. And that produces exactly the kind of violent, directionless volatility we saw this weekend. But here is what experienced market participants understand that retail almost never does. Volatility driven by political ambiguity is temporary almost by definition. The policy clarifies, the headlines settle, the dust clears. And when it does, the underlying structure of the market reasserts itself. The question is not whether clarity comes. It always does. The question is what the structural picture looks like when the dust settles, and right now that structural picture has some very specific things to say. The fear and greed index has hit 10. Extreme fear. Let me tell you what that number historically means in Bitcoin. In November 2022, when FTX collapsed and the world declared Bitcoin finished, the fear and greed index hit the floor. Bitcoin was around $15,500. In March 2020, when COVID crashed markets 50% in 2 days, the index collapsed. Bitcoin was near $4,000. Every single time this index has touched extreme lows, not occasionally, but every single documented time, the people who sold into that fear were not the ones who look back feeling good about the decision. The people who held through the pain or who added exposure when the index was screaming maximum fear, those were the people who were eventually vindicated by the structure of the market. Now I want to be completely honest with you. A 10 on the fear and greed index does not guarantee a bottom. It is not a buy signal by itself. This could go lower. Bitcoin could test $65,000. It could test lower levels before finding structural support. Cryptocurrency markets are volatile, unpredictable, and anyone who tells you otherwise is not being straight with you. This is not financial advice, and please treat it as educational context only. But what I can tell you is this: a reading of 10, combined with smart money sitting net long at positive 1.31K, combined with retail sitting net short at negative 397, combined with $104 billion still locked in Bitcoin ETFs, combined with liquidation liquidity clustering above the $71,000 zone on the heat map, that is not the data picture of a market in structural collapse. That is the data picture of a market being temporarily dislocated by a geopolitical shock and a 48-hour ultimatum that may or may not result in actual military action. The 48-hour clock is what matters most right now. Trump gave Iran 48 hours from his Saturday post. That deadline falls on Monday. Before Monday's market open, there will either be some form of de-escalation, a response from Iran, or the beginning of something more serious. Each of those outcomes carries a different implication for Bitcoin. If tensions de-escalate even partially, the risk-off selling pressure that drove Bitcoin from $70,000 to $68,000 overnight has a very obvious path to reverse. The overhead liquidation clusters on the heat map would become targets. The smart money long position would begin to pay. Retail shorts would feel the squeeze. If tensions escalate further, risk markets will face more pressure, and the structural support levels in the mid to low $60,000 range will come into focus. What I know for certain is that the people who make clear-headed decisions in the next 48 hours, not reactive ones, not panic-driven ones, but decisions grounded in the data sitting in front of them, those are the people who will be able to look back at this weekend and understand exactly what happened and why. The people who sail into a 10 on the fear and greed index because a presidential social media post scared them are writing the same story that has been written at every major bottom in Bitcoin's history. And that story never ends the way the person writing it hopes it will. Stay informed. Watch the 48-hour deadline. Watch the liquidation clusters above $71,000. Watch whether smart money's net long position holds or reverses. Watch the ETF flow data when markets open Monday. The data is public, The blockchain is transparent. The positions are visible to anyone willing to look. The noise is loud right now. It always is at the moments that matter most. But noise and signal are not the same thing. And knowing the difference between the two is the only real edge that exists in a market like this one. This is not financial advice. Cryptocurrency markets are volatile, and unpredictable. Never risk more than you can afford to lose. Always consult a licensed financial professional before making investment decisions. But do not make permanent decisions at a temporary emotional extreme. That has never been the right move, not once in Bitcoin's history, and I have no reason to believe today is the exception. Drop a comment right now. Buy, hold, sell, or watching. Because 6 months from now, when the hindsight crowd shows up, I want the record to show exactly where this community stood when the index read 10 and Trump was threatening power plants and everyone was certain the story was over. See you in the next one.